What if I told you there's one investment that has turned ordinary people into millionaires without picking a single stock? Would you believe me? Yes, that's the truth. It's the same investment Mr. Warren Buffett, the greatest investor of our time, has publicly told his family to own when he is gone. It's not flashy, it's not the latest tech stock, and it's definitely not a crypto gamble. So what's that? So it's something so simple that even if you have never invested before, you can start with as little as $100. And it's called the S&P 500. Yes. So S&P 500 stands for the Standard & Poor. So basically it's the benchmark index of US top 500 companies by market cap. Hey friends, welcome to Aussie Wealth Builder, where freedom begins with peace. My mission is very simple. Help you build wealth that gives you freedom without the stress of gambling on risky bets and without trying to time the markets by trading. If you enjoy simple, practical investing tips, please hit that like button, subscribe, and let's get into it. So, the section 1. What is S&P 500? So I'm going to explain you from a very relatable story angle explanation. So let's start from the top. The S&P 500 is basically a list of the largest 500 most important companies in the United States. Think like this: Apple, Microsoft, Amazon, Johnson & Johnson, Coca-Cola, and more. It's like owning a slice of the biggest supermarket in the world. But instead of just going and picking up just one product like Apple or Microsoft, you get a little bit of everything. So the tech, the healthcare, the finance, energy, consumer, and the goods. And here's the magic. When you invest in the S&P 500, you don't have to guess which company will win or lose. You own them all, you own them everything. So if small companies fail, others rise to their place. It's a built-in resilience. Section 2. Why it's fantastic for long-term growth. Over the last 50 years, the S&P 500 has averaged about 10% year in total returns. That's with all the booms and bursts included. Yes, there are bad years like the 2008 when it fell almost 40%, but here's the key. It always have been recovered and then hit the new highs. Imagine this: if you have invested $10,000 in the S&P 500 in the 1980s and just left it all alone, reinvesting the dividends, today you would have had over $900,000 in your account, and that's without picking a single stock, my friends. So why this is like this? Why? Because you are harnessing the power of compounding. Your returns start earning returns, and over decades it snowballs into serious wealth. So, in section 3, what Mr. Warren Buffett says. Let's see here. Now here's where it gets really interesting. Warren Buffett, one of the richest people in the world and considered as the best investor who's still alive. And he has publicly said this: my advice to the trustee could not be more simple. Put 90% of the cash in a very low cost S&P 500 index fund. Buffett himself has said that most people, even his own wife, after he passes, would be better off investing in an S&P 500 than trying to pick individual stocks and try to be heroes, because history shows it beats most active fund managers over the long term. Yes, that's the truth, my friends. So section 4, how ordinary people can use it to their advantage. Look, you don't need millions to start. In Australia, you can buy the S&P 500 through the ETFs like the IVVASX or VOOASX right from your online broker. You can start with a few $100, add regularly, and reinvest your dividends. This works for beginners because it's very simple, no guessing, no daily market timing, no panic, or no selling because a single company has messed up. Because the beauty of this fund, it is a very self-reliant and very resilient by itself. It's also a wealth equalizer. Someone earning $70,000 a year and investing $500 a month into an S&P 500 ETF for 20 years could realistically end up with over $300,000 to $400,000, and that's assuming an average return, not the best years in the history. Fantastic, isn't it? Yes, let's move on to section 5, the emotional game. So here's the catch. You have to stay the course. Rain or shine, you shouldn't be selling it. You should hold. The S&P 500 will fall in recessions. Yes, they're not guaranteed. There will be scary headlines, but trust me, every single time in history the market has recovered and went higher. That is why I say wealth building is not just numbers, it's a mindset, my friends. You don't need to plant a tree and dig it up every week to see it's growing. Would you do that? No. So why would you do when it comes to finance? You water it, you protect it, and you give it time for a garden, isn't it? So it's same thing. You need to have patience. So if you want true long-term wealth without the stress of chasing, the next hot tip, or consider making the S&P 500 your foundation. So that should be everybody's base. This is not a financial advice. I'm just sharing what's worked for millions of investors worldwide and what legends like Warren Buffett have recommended. Always please do your own research or speak with a licensed advisor. If this video helped you, please drop a like, subscribe to Aussie Wealth Builder, where freedom begins with peace. And tell me in the comments if you're already investing in the beautiful S&P 500. Let's grow together. Thank you.